Okay, good. So we'll get started. The first order of business is the approval of the minutes from the last meeting. So entertaining motion. And Ed, I assume you'll second that.
I second.
And anybody have any comments on that? All right, so the minutes are approved. The next item on the agenda is Diane. We just wanted to officially welcome you to your new responsibilities, and we look forward to working with you wherever we can try to help.
Oh, I appreciate that. Thank you.
Good. So morning, welcome. Okay. So we have, we brought Linda up as one of the team here.
All right.
Ed is there. Rob should be joining on video soon.
Good.
And unfortunately, I think Bill had a repeat obligation. All right. So the next thing, and probably the major topic that we wanted to do for this meeting was the audit and the preparation of the hacker for this for 21, I guess. And so with that, I think the goal was to get an update on the audit and an update on any issues, internal control issues, and just generally where we are and what the timetable is going forward, so that we can all be prepared.
First I've seen it. I've never heard it.
Sure. I'll tee it up, and then I think Joe and Dr. Keaton will have some comments as well. As you recall, I think maybe 2 weeks ago, we had a small meeting just to kind of chart the progress and get some tentative timelines and deliverables. And at that meeting, we determined that we can in fact get a letter of transmittal. We'll send that out first before the MD&A. We've started working on that document. Joanne and I have been collaborating. She's provided me some of the Board of Ed information that goes in the transmittal. We are working with the First Selectman's office just to get the major development initiatives that's part of that. So we're structuring that, but our goal is to get the transmittal letter to you hopefully by the end of the month, so that you have that, and then we would wait on some of the preliminary financial numbers and start putting together the MD&A analysis of those. So that's kind of where we are. Joe is anticipating coming on site with this team next week, but I'll let Joe speak more to the schedule and to the requested information and where we are with that.
So Joe.
Yep. So right now we're still, most of the financials are put together. So now we're pushing out some of the questions. We haven't done any of the audit work. That's going to start on Tuesday. So we've done a few things from here, but Tuesday is the day, and potentially Wednesday, the day we're coming down. So we did send out request lists to both the town and Board of Education on some of the things that we needed, after going through and entering the financials and looking at what we might need to audit and doing our team meeting and planning on this side. So the goal on Tuesday is to come down and do the audit work, the bank recs and some of the other balance sheet testing, because most of the other testing was done along the way in the preliminary phases. So now we're just kind of tying out that governmental revenue and getting a handle on state single audit anyway. Federal, I think the big thing with federal is at some point, and we'll probably talk on Tuesday, I kind of need final decisions on ARPA and what you're doing with that money and revenue replacement versus spending, because that drives several different things: revenue recognition, the federal single audit. So that we're anticipating if you have any ARPA, if you use revenue replacement, because most towns didn't really spend the money before June 30, and that becomes a major program, then the federal single audit is not going to get issued with the regular audit because we still don't have final regulations and we don't have the compliance supplement from OMB. So they're projecting that to come out in November, but they rarely hit their deadlines or their projections. But so until we have that supplement, we wouldn't be able to audit that program. But the federal government extended the filing date for federal single audit, that piece, from March 31 to September 30, because they're so far behind in getting everyone the information they need to do that audit. But determining how much and what the town is doing, drives a part of the audit. So that's the status of that. Again, we're not to the point of audit adjustments. We've had our standard adjustments to taxes. That area still needs some attention as part of the close. So we do have adjustments to taxes receivable and taxes deferred. I wouldn't say they're significant, but that's something that is not really working in the close process as far as tying that to what the tax collector says. Internal controls, nothing has come up at this point. Again, we're going to be doing more of the balance sheet testing, but from a preliminary standpoint, we didn't identify any specific concerns with that. And the new accounting developments are really, there's nothing, from a standard side, the biggest issue is this ARPA and the timing of when we're going to get that information to be able to, audit that program and more clearly understand what you could spend it on. Based upon the Q&As and everything that are out there, we're hoping that they relax some of the, instead of those 4 buckets, we're hoping that maybe it gets broadened a little bit. But other than that, there's not anything. I mean, we are looking at, I don't think there's any impact. ASB 84 is effective, which is fiduciary funds, so it just requires us to look at your deferred comp plans, and if you have defined contribution plans, and evaluate whether they need to be in the audit, because at least definitely deferred comp plans have been out of the audit since the 90s, and now GASB is looking at maybe, depending on if the town has certain responsibilities, bring those back. So that may have an impact, and I can take a look at that. I know that evaluation was started, but I didn't look at what the results were. So that's the big picture. Again, just due to the timing of which I'll have more information after we're out for a couple of days getting through, but we expect to get through quite a bit when we come down next week.
Okay, Joe, just to follow up on that, on the ARPA, the impact on this audit, to the extent that we use the funds for any revenue replacement lost in fiscal year 21, is that correct?
It doesn't matter what year you use it, if you claim it. So if you budgeted money in the 22 budget, then you already kind of conceded to revenue replacement conceptually. So I don't know if you did budget in 22, but if you didn't, then it's just, are you going to apply that calculation to give yourself more flexibility or not? Because it's based upon calendar 20, it really is going to be earned in the fiscal year, because it's based upon fiscal 20, calendar 20 information.
Okay.
So if you do that calculation, then that's something I need to audit that calculation, and then it needs to be reported on the federal schedule as spent, because it's kind of like a performance grant. The performance is you had a revenue loss, so conceptually it's earned. It's not driven by spending like normal grants.
So the town is still going through that deliberative process of deciding whether we're going to apply to lost revenue. If we do, how much is it going to go to lost revenue? How much is going to go to the initiatives? But we can talk some more when you come back on Tuesday, because we would have had this. There's some other meetings that are happening in the next week as well. So we'll get some.
So what it could be that there could be some impact on the 21 financials.
Yes, from what I'm
To the
understanding.
extent that it's been earned,
Right.
let's say.
Right. So if we claim any of it as lost revenue, is revenue that was lost during this audit year.
during that time.
And therefore, Joe will have to calculate.
And then it could be like revenue,
Right.
otherwise it'd be deferred revenue or whatever the right word is.
Right, so just to clarify, just because I've, had this conversation with at this point, the revenue replacement just, it doesn't change how you spend, doesn't mean that it drops in the fund balance. It just takes the restrictions off the money. Right now, you can only spend it in 4 buckets, and whatever is in the act, with it water and sewer and those type of things. So if you claim it as revenue replacement, you can still put it over in capital and the boards could figure out what they want to spend on. So it doesn't change that you have X amount to spend, because you certainly could let it drop in the general fund, but I don't know anyone that's really using that strategy unless they, put it in the budget. But so the strategy with the revenue replacement is to remove the restrictions. And the best example is you cannot do a road with that money under ARPA. But if you take it as revenue replacement and put it in your capital fund, then you can do roads with that money. And that's just one example. So the best strategy to give the town the most flexibility is to apply that calculation. Again, it doesn't impact what any of the boards are doing or looking at. It's a spending, it just basically frees up the money, and the only restrictions that remain is you can't spend it on pension and debt service. There's some things that are explicitly excluded that you cannot spend it on. But
You have different accounting. One's like revenue and the other is like just a balance sheet.
Right, so,
If there's $1 million, which is revenue, that would show up as grant revenue.
right, so there's how you treat it and how you book it, but then what Joe is saying is the restrictions on how you spend it. Because once you've said X million dollars is attributed to lost revenue, you've already met the criteria for the use of those funds.
There won't be
How you spend that money now is not
there
tied.
won't be any spending, let's say, specifically for that as of June 30th.
Correct.
That'll all be this
That'll
year.
all be future years.
Right.
So there won't be any.
So if you take some as this revenue bucket, as a lost revenue bucket, that just becomes regular funds that you can spend. on
It's essentially how you-
anything you want.
Could I ask a clarification? Sure. So once it goes into the general fund, then you don't have to account for the spending per se.
Right, so once it's attributed to lost revenue, it's in the general fund, you would spend your process as you would in other project. You just use the amount.
And the other thing is, despite the fact that we had no net loss revenue for the year, we had line item loss revenue, parking things, but we had overall no net loss revenue.
So that, yeah, so I interpret that, Joe, what are that? The revenue calculation that I saw in the GFOA is specific to the revenue source and total, or do you calculate, like if we lost parking revenue, but we gained inconvenience, conveyance tax revenue. So net, our total, we have 98.5, budgeted collection rate, we collect 99.8%. And therefore, in most years, we're not gonna have a net loss of revenue because of how we budget in total.
well, I mean, the revenue loss calculation is that's in the act is very generous. It gives you 4.1% expected revenue growth, and we're measuring against June of 19. So that comes out to 6.15% expected revenue growth. So even if your revenue went up, unless it went up over 6.15, you're going to have a revenue loss.
And when you're saying revenue went up, actual, not budget.
Actual revenue. And again, you measure either general fund and see how that works, or you measure entity-wide. But again, the calculation, it's really based, again, a lot of Connecticut is different because we're so heavily on property taxes, but the calculation is looking at towns that rely on sales tax and hotel tax and all that. So there's always an anticipated growth. So they put a very generous growth factor in there. So most towns are not growing at 4.1% a year in revenues. Again, it certainly could happen. It's happened to like a North Haven because Amazon, that huge facility, came online and taxes went up $6 million without the tax rate changing. But almost every single town outside two of them out of 20 something have shown a revenue loss because the percentage is so generous. So it's worth doing the calculation and understanding and putting it in the GFOA form. And, at this point, I've looked at, 15 of those, so I'm pretty familiar with how to do it. It's just got to do calendar year revenues. That's the pain part of it, because they pick calendar year versus fiscal year. So that's why you're getting 18 months, because the base year is June of 19, last audited, but calendar year revenues is what we're measuring. So it's definitely, I think, worth doing. And again, just to be clear, the revenue loss does not have to go to general. You can take that money and leave it in capital and appropriate all of it. So the revenue loss is not a general fund thing. The town can put that revenue loss wherever they want. It doesn't have to drop into general. So our recommendation is to put it and appropriate it out going forward, like you would any other capital thing. So you have that flexibility. Again, part of it maybe has to be spent in those 4 buckets. And then the other part, from revenue loss, you have more flexibility to fund capital as you normally would, because so that's, and I can walk you through more detail, but that's kind of what we're recommending, to give the town the most flexibility in accomplishing what they want to accomplish. Again, the revenue loss would be measured again at calendar 21 and calendar 22. So, because obviously there's more money coming, because it's really based upon the award. It's not based upon just that you got half now and half later. We're measuring against the award in total.
In other words, this $3 million that shows up on your schedule,
Right, so that's
it
what,
may or may not be the calculation of what the possibilities are.
right, so that was based on the GFOA calculation of 4.1%, projected 4.1% growth, net out, which actually exceed at the net loss. And I'll share this with you, Joe.
So
But this,
by the way, this was scheduled in the package that Linda had sent for the meeting today.
Is it just fiscal year 21,
Page
or
4.
fiscal year 22 also? Because
Joe, does it go to fiscal year 22? Or is it?
Revenue loss is measured every December 31. So yeah, so it's calendar year, unfortunately, calendar 20, and then we'll measure calendar 21 and calendar 22. So you can claim more of that money in revenue loss going forward if you have revenue loss, because right now they haven't adjusted that 4.1%. I don't know if they plan to or not, but somehow that's the number they came up with when they pulled
So,
this.
you guys are working on it, right?
and your calculation was done on a calendar year basis, not a fiscal year basis.
Mine was done, I'm trying to remember.
Fiscal year.
I believe mine was done on a fiscal year. So we make some adjustments. It's not be much, there'll be some fluctuation. Ballpark we're talking about.
March to June of the prior year.
March, I don't know.
Last year, 2020. Oh, we didn't have revenue loss before March of 20.
Right, so if you compare,
Yeah, so we'll put those on the agenda for our next meeting, which I think we have more regular meetings coming up the next 2 months, I think. We have 2 meetings, one in November, one in December, so maybe next meeting, you could just give an update on it.
sure.
Because I know there's a whole process to determine how you're gonna deal with this
Yes.
6 million. Which you're probably.
And by then Joe will have done the testing on the number, that's, we'll have some.
Okay.
No action was taken in fiscal year 21 to move any of the funds received at the end of June into the general fund. It's sitting in a.
No, yes, so the funds right now are sitting in a.
The proper presentation, sitting in a grant fund.
Right. But, and Joe, yeah, we have those. Until decisions.
So that's one thing going on is the whole process to determine the 6 million. Right. Joanne, we haven't heard from you yet. Yeah. Give it up. I know you
Sure. Good morning, everyone. So as far as the grants that are coming out of the federal government, we actually received 2 in fiscal 2021, and they were actually repayment of expenditures that we had incurred in the summer of 2020. So early in the COVID pandemic, we had gone to the town and asked for a special appropriation. In total, they gave us 1.9 million north of that. We had full disclosure of our expenditures for that particular appropriation. And we were able to use 250,000 in 2 grants. One was CRF and one was ESSER 1 to refund that non-lapsing account and assign those expenditures to those 2 grants. Since then, we've received notification that we are entitled to 2 others. One is ESSER 2, and it's 450,000 plus. And then the ARPA, which we call ESSER 3, is in excess of 1 million. All of these grants, we have to fill out applications, and the state of Connecticut Department of Education approves how we're spending our money. So there are buckets that we have to, just as Joe said on the town side, we have the same type of setup on the education side where we have to actually comply with the requirements, and they approve the expenditures. And then for the last 2 grants, we move forward and expend the funds. So in the non-lapsing account, as a result of receiving the grants, we do have an excess of 300,000 that is going forward into 21-22. And therefore, we won't have to go to the town for additional funding for our COVID expenditures because that is sufficient to cover our expenses with the 2 grants that we're getting.
So with respect to, so if I heard you right, that there's the various grants that you've applied for and received.
Right, they're basically entitlement grants. So we're given a number, from the state of Connecticut, this is your number, and then we have to tell them how we're spending it, and they have to approve it. And I believe they have 8 or 9 people they've hired to actually analyze the applications to ensure that they are compliant with the federal guidelines.
So when we look at the financials for 21, what will there be? There will be grants, revenue,
Right, so
and the expenses.
yes, so for example, Joanne referenced the ESSER grants that we received this fiscal year. On the town side, we received some FEMA funds last fiscal year.
You say that it should be.
Fiscal year that ended June 30th. So we received some FEMA dollars. We also received some CARES Act funding that came through the state. Those were reimbursements for expenses. And so those moving, you will see the revenues that were associated with those and the expenses associated with it. Some of those were direct expenses. Some of those we were getting reimbursed for indirect expenses, mileage, things like that. But you will see those as expenses. And that's, I think, what Joe was talking about on the single audit side of it. Those will also pop up as use of federal and state funds. So there'll be a lot more activity this fiscal year than we've had in the past, just because of the funds flowing from other
Well, I find it bewildering, I think the word, but keep track ins and outs on these matters. Be very, very helpful for such as myself, coaching, analysis of all ins, on outs. What is done to us.
Chuck, could you repeat what George said? Because we can't hear it. What George said, couldn't hear. He wasn't talking into the microphone. Could you repeat?
Okay, I'll repeat. Very briefly, I went over
That's the thing that matters.
That's the
Well,
thing
that does help.
Okay.
You can't talk into that mic, it helps.
I went over
But this
this.
helps, but this helps.
Yeah.
Okay, thank you.
I dutifully went over the material that was sent to me to look in preparation of this meeting. And even before this discussion, I found it bewildering trying to track all the ins and outs on this pandemic. And I hope it was possible to develop an analysis that brings in all the ins and the outs and come to the bottom line over whether we made money or lost money. But right now, I go to the financial statements, I find a bit here and a bit there. He sent me an analysis saying that the $6 million, you already got half of it, the other half you're gonna get in 2022. They're nuts after a while, we just don't know where all these things are going.
We could prepare a
Does that
schedule.
make sense?
It does, because
You're
you're
right,
right.
column per town and board and total and received.
Right, and it's also broken down by programs, because we've received reimbursements for, the health department has gotten some and whatnot, so we can prepare a schedule.
I would think it's
Just
something
in
cool would be
Thank you very
useful,
much.
useful for maybe other purposes too. Is there anything else from that annual report that you sent, Joanne, that you wanted to highlight anyway?
Just briefly, we did end up the year sending or underspending our budget, I guess is a better way to put it, by $1.3 million. So that's going to benefit the town moving forward. One of the areas that we are focused in on is the Internal Services Fund for our health employee benefits. We did have a year with claims actual claims that actually were over the projection by 100,000. On a $13.2 million projection, that's not terribly significant, but historically for the last 5 or 6 years, we've been under projection. So that area right there, we're going to be paying a lot of attention to. We did have to make a transfer into Internal Services Fund at year end. Todd Laviera from the Finance Board was able to sit in on our meeting where we made those decisions. But other than that, we had a year where we didn't provide all the programs because of COVID. And as a result, we were able to underspend our budget by that amount.
I know in the budget process and so on, there were discussions about the.
Right. So when we set our budget for 2021, it was really pre-pandemic. I mean, the pandemic really hit hard at the midpoint in March, and we didn't really have a handle on, what impact it would have moving forward, as much of the world didn't. So our budget was built in 2021 based on the existing program. And so that's how we were funded by the boards. So we had at budget time, we reforecasted for the 2021 year. We had anticipated sending a little over $1 million back to the town from our budget. And as it turned out, it was 1.3.
Right. And then there was a lot of discussion about this year's, but this year being 22, the budget.
Right.
And I think your discussion point was that you thought that deferred medical procedures that were deferred last year might be incurred this year, and there might be, those extra expenses, things like that. And I think that was a point of discussion in the budget process about whether that would be budgeted or whether that would be kind of funded as incurred. Is that right?
Right, so there was
Or
a
is that trending kind of how this year? Is that trending?
So we have had a spike in our claims this current year. Right now, our claim budget for this year is 13.2 million again. And we are right now at 5.2 million after 1 quarter. Now, having said that, and that's a significant percentage, obviously, of the total budget. However, we have some high claimants in there that have hit the 300,000 mark that we are, which is our specific stop loss, anything over the 300 per individual is paid through our stop loss insurance. And we are in the process of waiting for those insurance payments to come back into the fund. So last night we were before the Board of Finance and explained, where we are currently with the Internal Services Fund. And we're not going to ring the panic button right now. We do think, we have to obviously work through the year. But, we are incurring some high expenditures just from high claimants. And then people are more normalized with their routine procedures. People are getting back to the doctor. So we're seeing our claims analysis, which Joe Spurgeon, who is our consultant, puts together for us, materializing.
So that'll be just something that progresses throughout the year.
Yes.
Mhm.
Figure things out as they happen.
Right, and I think at the meeting last night of the Board of Finance, Dr. Keating and Dr. Lansing made a similar presentation. And I believe there was agreement that they will provide, not only are they going to provide periodic updates to the Board of Finance, they're doing so to the Board of Ed. And therefore, once that information is shared, we will also get more periodic updates and monitoring of internal service fund. And to the extent that any additional funding needs to happen on our end, we have a process in place for that to happen. So there are several triggers that trigger the use of the funding corridor, whether it's what the Board of Ed has or what's on the town, because we do have funds in our assigned fund balance for these expenses. And so we'll just kind of go through that mechanism.
Yeah, so on the aggregate stop loss insurance, which is our maximum exposure, it's 20% of projected claims, 20% beyond projected claims, and we are funded for that amount. So there's 40% in the Internal Services Fund for the Board of Ed, and then in the general fund, the town puts aside the 60% in their fund balance, should we need it. We haven't needed it in the past, but should we need it, we have it there. So I don't think it's going to be a funding issue for us for the current year, but it could be an issue moving forward if we have to replenish that in terms of budget dollars.
Okay, good. So maybe the next meeting, then you could send out together that report that George was talking about. Send it, as we meet, we can continue to hear updates on the status of that. And the timeline, anything else for the capper? You said you were going to get the transmittal at some point to
Right, so we're
review.
right. So we're going to get the transmittal to you by the end of the month, as I mentioned. The First Veterans Office is working on. There's a section of their major developments that will come out. Most of it's done, the demographics, statistics. Yeah, together to issue those. Typically, I send it out to Joe. Joe takes a look at it. I think we'll try that, and then will follow. And Joe, I don't know if you have a sense of the CAFR itself. Timeline. I know typically at the November meeting, we share some drafts, and then it comes to you for approval in December. Do you see any changes to that this year, especially with the delays on the federal side of the reporting, the March to September?
I mean, with some of these decisions, it's going to slow down the process a little bit until some of that's there. So, again, we'll have a better idea after next week, but then some of it's the timing of capital assets. But just in general with ARPA and of course with the staffing changes on both sides, I do have some concerns as far as timing. So we're working through that, but I do want to put that out there now that just it may be a little bit more delayed than in prior years, just because we have different people trying to manage through this, and then the ARPA decisions and those type of things are just changing the whole dynamic again across my whole practice, not just so it's just last year was more COVID. Now this year it's more ARPA and that type of those issues that are just slowing down the audit process. So, and again, the staffing changes or my gap is having a little bit of impact on timing also, but we are working, trying to minimize that, but I do want to just at least put that out there now that that could have an impact on timing.
Okay, so the hope is that there would be something to look at probably before the next
At least on the transmittal side, yes.
transmittal side, maybe not. So your thinking is that maybe the draft financials and final financials would all be,
When is the next? When is the next one?
it is, 5th.
November 5th. Oh, sorry.
So we'll have to coordinate things, because I think it would make sense to be able to have an initial, some kind of an initial review, because it takes a while. And also to be able to provide any input. And then hopefully the one in December would be more of a, kind of a approval, right, rubber stamp. So I think we're always looking at November as being somewhat of a detailed review. We'll get all that stuff done. And then, finish up, but hopefully everything's already been kind of discussed. To the extent that November 5th doesn't fit into that schedule for some reason. So see what makes sense to do.
We'll have a better understanding when Joe's here next week.
Yeah, as things progress. Is the fixed assets brought in-house yet? Or is that still?
Yes, so we brought fixed assets in-house, and that's one of the things that Joe's going to be doing next week. So we have the updated schedules. We're using our financial system Units to run that. We brought in all of last year's ending balances, the time with this year's beginning balances. We're looking at the additions and deletions. And then right now we're running the depreciation calculations based on useful life of the assets. And when Joe comes in next week, we'll be able to share what we have with them and allow them to do their additional testing as they've done.
But you've got the system, basically, everything through June is in the system. So
Yes,
everything
everything is in. It's just a matter of checking that we haven't missed it. So typically what we do, we say, we look at the invoices, what we acquired. Here's what we have, we send it out to the departments, we'll take another look, are we missing, is there a tractor missing, or is there something on this list that was liquidated through a transfer and exchange? And then to the extent that they're comfortable with that, then we do that, and then Joe will come in, they will test that with a 5-year capital and then see what means that should be on their proof additions and those types of tests.
Is there anything else you want to talk about it at this time?
Is this on the agenda or?
For the audit and let's say last year's 21 financial process?
Well, I just have a couple of comments on certain trends that I see that are troublesome, and I wonder if you can point those out.
Sure, that's discussed.
The package that from Louisville, page 17,
17.
1717. There is a
Joe, can
line.
you,
There is a line called fund balance drawdown. You're familiar with that, I'm sure.
yes,
And it typically, at least when I was in town hall, ran in the vicinity of $2 million. More than that. And it's here that it has crept up so that in fiscal 21, the drawdown was 8 million. This 22, it looks like it's 5 million, around 5 million. It's a significant increase. And that that has reduced the fund balance from $35 million, more or less. It's 20, and now to 25 billion. So if this continues on that path, it's very troublesome.
Yes, and you raise a good point. So let me kind of walk through those numbers that you have there. So on the financials that's on the screen right now, the third column of numbers, the revenues.
This is like for either Ed or Rob, this is the package that was sent
They're
out.
seeing that.
Yeah, they can see it, but it's
Oh.
hard to see too. Page 17. Okay. Sorry.
No. So the third column, to your point, is that revised budget column. So initially, and I think Dr. Keating made reference to this. Initially, when the budget was originally approved, the budget was approved with a budgeted fund balance drawdown of last year was 4.5. I think it was 4.5 million or 5 million fund balance drawdown. And then during the year, which is that revised column, we, the Board of Finance and Town Council, approved 2 additional special appropriations for the Board of Ed, which essentially led to a budgeted, additional budgeted drawdown. They were all related to COVID. There was $1.5 million this year for the COVID. The 1.5 was for the non-lapsing fund, which is the 1.9 that you referred to. And then we also did a transfer to the Board of Ed Internal Service Fund towards the end of the year. And so that brought the budgeted drawdown to 8.
That's what shows up.
That's what shows up there. So
But originally was
originally
budgeted, let's say at around 4.
it was budgeted about 5, and then we
Right.
had those almost 3 or so million.
And that was well discussed during
Right.
during the budget process.
So the fourth column is, now these are unaudited numbers as of yet, but what actually happened, to your point, we did draw down, we will be drawing down, right now we're looking at something like $5.4 million, not counting the COVID funds, because those are not in the general fund. But it is a trend, and you're right, that there is a $5.4 million drawdown to the fund balance this fiscal year.
So there's a 5.4 less than the 8 because of reimbursements.
Yes, because it's less than the 8, because the 8 took into account initially, we budget 98.5% budget collection rate, and so the budget, the actual
So it's a
collections
little
came in
better.
higher, a
Like
little
it
better.
always is.
Conveyance fees came in a lot better than what we had anticipated.
Okay, so
Spending came in
it
less.
wasn't necessarily reimbursements, it was just.
No, it was just budget.
It was what you would normally expect.
Right.
So 5 million, and then in this year's budget, the budget is 5.
And this year's budget is 5 million. If the trend continues, we would typically overcollect, and so we typically don't realize those losses, those budgeted losses. But fiscal year 21 was a unique year because we did those 2 special appropriations with COVID. And then the reimbursements, the Harpa funds, are not part of this equation. They're kept elsewhere.
So in theory, another the way of looking at it is if you hadn't had the special regain or whatever, Board of Education, or the 5 million might have been 3 million,
Might have been, yeah, 2.
which would be more in line with history.
Which would be more in line with history, and also would take into account the lost revenues we had this fiscal year. I mean, we lost interest income went down, parking revenue was almost zeroed out this fiscal year. So that would account for that, but I think that is largely driven by special appropriations.
So to be clear, I guess by industry standards, a balance of below $20 million is considered quite comfortable.
Right, I think that puts us at about 18-19% fund balance, which is still, many would consider that relatively high. How Kevin's looking at compared to the Board of Finance guidance is 10%, GFOA is 16%. We're sitting at about 18-19%.
I'd like to just bring up one other item. I know we're big to web canvas is hard, and that's the condition of our roads. I'm looking at the 5-year plan. I think we have budgeted very comfortable $12 million a year.
When does the
No, I'm
charter?
sorry, $5 million. $5 million a year.
So the pavement budget is usually about $2.5 million.
Two and a half. Yeah. Like that. In any event, irrespective of spending over $2 million on our roads, they've never been in worse condition. And I know we attribute a lot of that to the gas work. I don't see that reflected in the 5-year plan at all. We just go merrily budgeting 2 point whatever million a year for it. But what is the story with any reimbursements that we're supposed to get from the gas company? And, if it's material, why is that not reflected in this 5-year budget?
I respond to that. So the gas company got a 1-year extension for the 3-year deal they had with this section.
So I was told this morning.
Yeah, George and I saw each other this morning, he asked that question.
Repairing because they couldn't hook people up and due to COVID, they couldn't go to people's homes last year. So the deal with Eversource Gas is that they have to restore the roads at the end of 3 years. So there are roads that should have been done this year.
So what standard do they repair?
Oh, and they're required, so they reimburse us for the costs. We choose the contractor. So it's back to and they're required to restore the entire road, not just half the road, like is done with the state. The state only requires they restore the half the road that is disturbed. You'll notice 106, which is the state road in South Avenue, we're done, as well as 123. We're done within 18 months because that's the state requirement. The MOU we agreed to with Eversource Gas under my predecessor allowed 3 years. So now the other thing is the downtown roads are not just Eversource Gas, they're Aquarian Water Company. So Main Street, Lower Main Street, Elm Street is all replacing 100-year-old water mains. They have to be done. So as Tiger Man would say, our PCI index overall is actually good because all the other roads in town are fine. It's just the downtown roads, which clearly are a mess. And the contractors for both Aquarian Gas and Aquarian Water and Eversource Gas have not been meeting the standard they should in terms of the quality of temporary repairs. But we're going to make Lower Main Street will be repaved in a couple of weeks. That's Aquarian Water, not Eversource Gas. And then by next summer, we're going to have a lot of the roads downtown repaved at Eversource's cost. So the aggregate amount, I think, is in the $2 million that Eversource will reimburse us for those roads downtown. Tiger Man can give you a schedule.
Working process.
Well, it's unfortunately COVID affected this. They delayed the repaving of what would have been done this year downtown. And but the water company is the worst, and they're both owned by Eversource. I mean, so.
Okay. One more comment I promised I won't say it for. Going over this 5-year plan, it looked like it was developed by someone who could not say no. There are provisions for things that raise my eyebrow. For instance, we're putting in the trail at Audit, and we put that in our budget. There are so many local people who are in love birds. Why don't we tap them for that? The same thing goes with athletics. I mean, there are a number of items that we apply, but if we have a boosters club will be the envy of the country. Can't we get them to underwrite some of these things? Finally, wait, when I go there, it's a mess. It's costing us a fortune. And is there anything that put that a long-term fate of that building, like maybe selling it. And getting out of that business, like it's millions of dollars spread in this 5-year analysis.
Could I respond to that?
Amen.
So the 5-year capital is not a plan per se, it's a scheduling of what we anticipate to be required, roofs, boilers, roads, things that we anticipate may have to be done. Oftentimes, we determine, for example, the high school roof was budgeted by the Board of Ed $7 million. We actually did it for less than $3 million. Some of these numbers are inflated in terms of looking out several years, but we have a lot of maintenance, we have a lot of buildings. But when it comes to the partnerships with Waving Park Conservancy and with the Athletic Foundation, we made a commitment that if they raise private money, we will match to do improvements for Waving Park and with the athletic fields. Those are public-private partners we made commitments to. Finally, the Waving House is being studied. By the end of the year, we're going to have a plan. We own the building. I don't think we will really want to sell it. It's a beautiful structure. It's worth probably $25 million, but it's used by 60 or 70 weddings a year. I think the community wants to retain the building, but we're coming up with a plan to maximize revenues. Right now, we only get about $110,000 revenues for Waving House. We could be getting $300,000 if we manage it with a better wedding venue. So we're working on that, George. I think by January, when we come into budget season, we'll have a plan. We have a study going on with Iona College Business School and with this private group that runs the Greenwich Town Party. I think we'll have a very interesting plan with revenues that will be significantly increased for Waving House.
Air conditioning, every young woman.
Yes. Correct. So anyway, we're working on that, but I think the public-private partnerships in Bristol Bird Sanctuary are beautiful assets you have to maintain. You can't let them deteriorate and this is in Connecticut. We have a certain quality standard we have to maintain.
Yeah, so moving along, sure. So Linda had a package and
Slides, the debt slides.
one is the
Wants to start.
there's a capital expenditure review. I think we talked about that a little bit.
Just passed.
Probably, I think there's also a debt.
There's some bar charts.
Maybe a place to go is the bar chart, page 13.
I found that a little disturbing too, because the house, whatever year it was, it's higher than it is now.
Yeah.
Right,
But
and
this
this,
is good.
Right.
Thank you for putting it together. And I know there's a lot of effort by the Board of Finance.
and this goes back to Kevin's point. This is it is based on that 5-year cap, and numbers change. Like Kevin said, you had a roof that was budgeted at 4 million, ends up being 2 million, because we really approve the capital budget a year at a time. The first year is really true year that we have some really solid numbers projecting out. But Chuck wanted to see how we look with the 5-year capital, and so these are just based on that 5-year capital plan. And year one, we did approve, the Board of Finance and Town Council did approve $10 million for the library. I did mention we plan to go out for a $20 million bond offering at the end, sometime in November. And so we're factoring that. Of that 2010 would be for the library, and then we have other projects for capital that have been approved. But every time we update these numbers are adjusted because there are things in there.
But the point is you've kind of gone down to a $100 million type level. It's going to go back up.
Yeah, can I make a point about that? So in the last 15 years, the high point for our outstanding bonds was 147 million. We're down to less than 100 million, but now with the library and police department, a few things we're going to be going back up. The bonds for the purchase of Irwin Park are maturing in a couple of years. The bonds for the sewer system we did 20 years ago just are maturing this year. The bonds for the swimming pool are maturing this year. So these capital projects can be lumpy, like Irwin Park was a $19-20 million 20-year project. And but once it rolls off, we free up borrowing for more improvements.
We retire about 12 to 13 dollars.
What happened on the library? What happened? There was discussion about where other funding might come from, right? Whether it would come from the town or it would come from outside, right? Or whatever happened with that.
But the library is raising, they raised $16 million. They have another $12 million to go to raise private. There's no state funding, there's no other sources of it.
The bridge funding or whatever.
Oh, so the bridge loan turned out to be, the proposed loan with Bankwell was going to be over 4% interest, and we can loan, and this is short-term financing of their receivables pledges. People are pledging 3 years or 5 years. And we can borrow less than 1%. Bankwell charges what they charge, and but more importantly, we didn't want to have a conflict with Bankwell down the road. Bankwell could only be an obstacle to the town in terms of making sure that the library was able to finish their project regardless of what the economy does. So,
Will that be a bridge loan by the town?
we'll issue a series of 5-year notes starting next August probably. So, and we'll probably issue a maximum of $7 million, even though the face amount of that authorization is $13 million. The library expects the outstanding level will never be more than $7 million, and that'll be paid off in 3 or 4 years.
So the accounting for that, which is kind of what I'm getting to, so it's not involved in the discussion about doing it and things like that, but that will be just part of raising the money.
Right, so it would
Do
be,
maybe the bonding or.
yes, it would be bonding through the same process.
And then you would just, when you give them, let's say when you loan the money to the library, I guess, right? Then you would just have it received. So basically, and that's how.
And we're going to issue taxable bonds, not tax exempt, because it's not a qualifying governmental purpose.
So
The taxable bonds are a fraction in interest rate. When you're talking about 5-year bonds,
I understand.
and the library's going to pay that cost anyway, not us.
it's similar to what we refer to as revenue bonds, where they're not paid back by the tax dollars, but they're paid back by the pledges and donations that come. So we would receive them and we would retire. So
They're not pledges with you.
No.
With the library.
I mean, at the end of the day,
At the
it
end of the
is,
day, you gotta
it is
receive
savings.
in the library and hopefully they'll pay. I say expectation. Okay. So that won't be until even beyond 22.
Well, so we had the discussion, based on their timeline, they probably wouldn't be at that point until September, October of next year. It was up for discussion last night with the Board of Finance, they tabled it until November. But even with that appropriation, it probably wouldn't be part of a bond issue until later, it could be fiscal year 23.
Right.
When fiscal year 24 actually.
So it's not going to hit
So
any
it's not-
financials until beyond 22.
Beyond
So as far as I'm concerned, going down the agenda, we're now down to number 6, I think, unless anybody has anything before that. Which is 6 is the treasury update. So, assuming Andrew's still on, and there is a package. Do you have a package that you could put up that Andrew does? Did you have?
It wasn't anything.
Wasn't the treasurer's report on that?
Oh, you know, it's back,
If you open that,
came out.
But Andrew, go ahead.
scroll down, I think I shared it.
Sure. Thank you. Yeah, it should be further down. There we go. Can you go back, I think 4 or like 3 pages? Perfect. This one. Excellent. Thank you. So hi, everyone. So just wanted to give a quick walkthrough of our cash balances. And, you know, we just pulled this together. Our financial analyst, Josh, in the office crunched the numbers and, you know, just wanted to give you some insights and some comparisons to where we were this time last year. So all in all, our bank account balances in our checking accounts, I should say, are $23 million, which is about $2.5 million less than where we were this time last year. But I think part of that can be explained from, various projects that are in flight that we haven't yet bonded for, as Linda was saying, we're going to be going out to bond. And so that will cause for our accounts to swell up. You'll see the Chase Capital Projects account is captured in that 23 million off to the left. In terms of savings and investments, though, this is where the bulk of our cash goes when we receive tax collections. We put them into our fully collateralized money market account at Webster Bank. As you all know, we are in the process of transitioning our primary accounts over to Chase and expanding that relationship. All the contracts have been signed and approved by the Board of Selectmen, and we have a weekly project call with the project manager from Chase's end. So we have folks from the town finance department, and I've also been bringing Joanne and Tracy from the Board of Ed finance team because they're also going to be bringing some of their accounts on the Board of Ed side under the Chase umbrella with us to take advantage of some of the interest rate, like the promotional interest rates that we're going to be getting on our cash, as well as the no fee arrangement. So that should help save some money on their end. And they will still have, we're currently in the process of configuring our user access rights, making sure that there's that appropriate level of access for each side of the house, so to speak. And so it will take a few months to get everything transitioned. And then in line with that, the tax collection process with the lockbox will also transition in early 2022, calendar year 2022. So that process will occur in line with our transitioning of our primary banking accounts. But for now, our money is still primarily over at Webster. So I just wanted to kind of explain that off the back end. The other key change you'll see here is with Bankwell, we have expanded our cash deposits with them, and you'll see something called ICS. That's our insured cash sweep product. And to be clear, even though Bankwell only collateralizes 25% of our deposits, the ICS is actually fully insured by the FDIC. That amount is actually spread out across a number of participating banks in the ICS program that Bankwell and 3,000 community banks across the country participate in. And so we had done an RFP process. Bankwell won the RFP because the interest rate that they offered was superior to everything else. And it acts like a money market account. So we can withdraw up to 6 times a month should we need to, but really this is excess cash that we expect we don't need to touch. We never draw down to a level where we would need to touch those funds. So just wanted to call that out. And then we still have our 2 investment accounts with UBS and Janney Montgomery Scott. And again, those balances are relatively similar to where they were last year, primarily because these reflect the current value of our investments. And as you know, with interest rates in flux, that has caused for some of the bonds to depreciate in value. But again, we hold those through to maturity, so we never lose principal. And we just receive ongoing interest payments throughout the life of our holding of that bond before it matures. So, our investment duration is roughly around 2.5 to 3 years right now for those bonds. Again, it's primarily treasuries, but also some other government issued securities. So all in all, our total investments add up to 81 million, which again is a couple million less than where we were a year ago, though I should add it is significantly higher than we were last quarter, because in the past quarter, we had our big influx of tax collections. So our money market savings account at Webster has ballooned by over $20 million compared to the prior quarter. So, and then at the very bottom, you'll see the custodial funds. That is also seeing great growth in the past year. Obviously, a year ago, we were still kind of coming out of the pandemic. lows in terms of from a market perspective, but those balances have increased from 173 million a year ago to now a little over 200 million. So there's been a decent improvement in the performance of our pension fund accounts. So if you scroll slightly to the right here, you'll see kind of an overall summary of all of the different totals, the cash balances, the savings and investment balances that I just walked through, and then the custodial funds with Vanguard. And you'll see that we have over $300 million, which again, when you look at past balance history, it is in line with where we've been in the past. So nothing really material to report in terms of changes or any I guess concerns to escalate there. And then if you go to the next slide, just to talk about collateralization quickly. So with JP Morgan, we've agreed to 110% collateralization. So they're going to over collateralize all of our funds with them. So as we transition over to Chase, we're going to see the total amount of uncollateralized and uninsured drop completely, right? Because we're going to be leaving Webster. So we're going to only have a little over $100,000 at Bankwell that won't be fully collateralized. The Bankwell account is the Housing Authority trust funds. We're still discussing whether to keep them at Bankwell or to shift them over to Chase as well. I mean, again, we're trying to maintain a decent relationship with our local bank. So we're still talking about what to do there, but the goal is to get the uncollateralized amounts down to as close to zero as possible and have fully insured and collateralized funds for the town. And then the last slide that I'll talk about is on the next page. And this one just shows the interest earnings by institution from a calendar year perspective, looking at 20 and then so far in 2021. And again, you'll see that with the rates being extremely low, that has had an impact on our interest rate earnings. You'll see from the first quarter of 2020, a calendar quarter of 2020, we were earning, between $87,000 to $113,000 a month. Obviously, that has dramatically decreased because back then we were earning over, close to 2%. Right now, our interest is a bit lower. And you'll see too that the proportional breakdown of interest earnings across the different accounts has changed. If you look at the pie chart, you'll see that now UBS actually is almost a majority of our earnings, and that's because our portfolio of UBS is invested in various bonds and assets that are generally earning a little over 1%. So we are doing well from an interest rate perspective with them. But with Webster, our interest rate has dropped significantly to less than 0.1%. So that's why Webster has dramatically decreased from a calendar year perspective, from being almost 60% of our interest earnings to now being less than a quarter. So just wanted to highlight some of those changes for you. And again, as rates continue to start to increase, we should see better investment opportunities on the horizon. As cash comes due, we do reinvest the funds that we have at UBS and Janney. And based on our cash flow analysis, we do expect we can likely invest more of our cash balances right now held in a money market for higher interest. And so we're going to start working on another RFP to invest additional funds at those higher interest levels. So anyway, I'll pause there. I don't know if there are any questions about some of the facts and figures I've walked through.
That's a good summary. Thanks, Andrew. Quick question. When you say that the cash balance is down a couple, say from last year, is that largely a function, let's say, of what you were talking about earlier, which is the use of the general, what the rate?
Right, some of it is,
we were talking.
some of it is the drawdown of fund balance, timing of bond issue and the use of the capital funds.
Could be that too.
Right, because we use our own cash to pay for project and issue the bonds, because some of it is time.
So you'll get
So in November, when we do the 20 million bond, we'll see those numbers go up.
Yeah, the other thing I'd add there is like even when you just look at our Chase capital projects account balance from last year, it was close to $8 million at this time. This year, it's a little over 6 million. So there are projects that we've been paying for that haven't yet been bonded, where they've been authorized but unissued bonds. So that can also explain for some of that, difference in our total, checking account balances right now.
Good summary. Is this a summary you kind of prepare on a regular basis?
This summary gets produced every quarter. So I work with Josh Kaufman and our financial analyst, because he's responsible for all the reconciliation work on a monthly basis. And then as part of that, he's collecting all these monthly balances and putting them into a spreadsheet so that we can then look at it from a cash perspective and and produce these quarterly reports. So yes, this report's been produced quarterly since the start of fiscal 21. So now this is like the fifth report, or I guess, yeah, it's the fifth report, because now we're first quarter of 21. I'm sorry, of 22.
Yeah,
But we do it quarterly.
if it's okay, is that something maybe you could just like you sent around your monthly, internal financial summary? Maybe when this gets produced, you just shoot it out.
Yeah. Happy to share it with you. And generally it's been, maybe it's been coincidental, but the audit committee meetings have generally coincided with the start of, like the next quarter. And so we are, so I've been I brought this report to the last meeting, but I think it has been a couple quarters since we met. So I'll make sure to distribute it to the audit committee so you can take a look at it, regardless of whether there's a meeting coming up. And then at that following meeting, I can, answer any questions about it.
Good. Thank you. Very good. Thank you.
Sure. And then the last treasury update I'll give too is we're, as part of our transition to Chase, we're also going to look at ways to, maximize opportunity for electronic payments. We're still doing a lot of check printing and paying by check, but we're going to be working with Chase now that we're going to be migrating everything over to them to take advantage of opportunity to pay vendors with corporate card or ACH. And so we're going to be working with them on that. And so an analysis has been done of our vendor population to figure out which ones Chase can pay and which one they have a history of paying electronically for us. And again, that will help cut down on some of that, time-consuming check printing process and automate some of our payments, get some extra float on our cash. Because we wouldn't have to pay Chase until the 25th day of the following month. So you can get 50 to 60 days, or I guess 55 days of additional float on our cash. And since Chase is going to be paying us an interest rate of 0.2% as like a fixed floor rate for the next couple years, every bit counts. And on these sizable balances, it actually adds up to 6 figures of extra income for the town.
Are things generally paid by check now?
Yes, 90%.
Good. Very good.
Thank you.
Next, if there is anything that you wanted to highlight with respect to this year, there's budget and there's the actuals, and whether there's anything from either a
Sure.
education point of view or a town point of view.
So just a couple of things just to highlight what we're working on. In terms of IT, we are working on upgrading of our newest financial system. And so we're in queue. We hope to upgrade to the next version. The new version will allow us to do, it coincides with changing of the bank. So I think the timing is great. So one of the things we'll be allowed to do with the new system is Kevin's favorite topic is be able to have supplier pay and vendors logging in to our website, which ties in with some of the ACH work that we've been talking about. I think the check processing that Andrew mentioned is going to be significant because we spend a lot of time on that process, and it'll automate that process. I think it also a better internal control tool as well. We talked about bringing the fixed assets in-house. This week, Diane and I are going to be looking at a budgeting software, just another way to better present financial information to the public. So that is something that
Within, outside of years.
it interfaces with me.
It does
Yes,
interface.
it's some gov agents, GOV, NeoGov, ClearGov, ClearGov. So anyway, so that'll be interfacing, and so we have some discussion with them. There are a number of towns.
Is the goal of that to have information, let's say, out available to the public?
Yes, to provide more real-time information with the budgets and similar to what you're seeing now, especially on the budgeting side. And so I think that's just another way of providing that information. to those
So you be able
interested.
to kind of have real time,
Right.
not real time, at least monthly summaries that people would be able to look at and say,
And I think as we go out in the market with bond issues and whatnot, so, there are people out there that are investing in our bonds to the extent that, yes, we have great financials and AAA ratings, but the ability to access our information real time, remotely, ads, who started to mention that.
because a lot of towns have things like that, but
Right.
sometimes they're very difficult
They're
to
difficult to
maneuver.
get, they're static, and they're. So I just wanted to share those. As far as the budget, the Board of Finance, they've activated their budget guidance committee, so that's going to start some work in November. The goal is that the Board of Finance will set some guidance where we're going moving forward. So I'll start working with that group and provide some projections on where we are. It is associated with the end of the year, knowing what our actual ending balances are, looking at where we are with COVID and reimbursements. Those are just a couple of updates that are going on in finance.
Just out of curiosity, does any of that deal with maybe updating forecasts? Maybe not for external use, but internal. just-
We do. Well, one of the things that Kevin has wanted to do is just internally look at, 2 years up, because there's some note.
Or even the rest of the year. I know
Right.
that the financials, when you look at it, you got a budget for the year and then you've got actuals to date. You've got comparisons with what was spent last year. And then, you got percentages.
Right.
And
We
that-
do
that's
projections.
good, but it doesn't really.
We do projections typically, at least not at the 6-month mark. That's when we kind of it's more realistic at this point. It's more of a guessing game, because there are some things that we know what our salaries are, but there's things like snow plowing, we don't know this. So 6 months out, we get a better handle on that. But that is part of the budget projection process.
That's what all that is. Yeah, right.
I believe the Board of Finance this year does want to look more at actual to actual comparisons versus budget to budget comparisons. It's more realistic way of figuring out where we are. And so we're working with the Superintendent's office as well to get that done. So those are some of the things that.
But so far, at least numbers wise, things are. The first few months, it's not.
No. I shared this with the Board of Finance last night. And you have this in your packet as well. The first few months, everything is trending. We're anticipating to trend. I shared that conveyance fees is a revenue trend that is still baffling us. We had, it's still high. We had a budget of 1.1 million this fiscal year. We're already at 850,000 or so 3 months in. Last year, we budgeted $1 million, we brought in 2.8. And so that goes back to Kevin's point, offsetting some of those lost revenues and other things. So we think we're gonna have a good in terms of conveyance. Building permits are higher this year compared to last year. We've reinstated the parking fees and seasonal permits. Those year to date have already exceeded last year's total annual because we had the fees. Financially, the town is doing well and everything's trending away.
Joanne, is there anything from your side?
Sure, just a few things in terms of the roof. I think it was mentioned at the high school. We were able to get out to bid last year in February, so we procured all our materials and were able to do the project this year. Across the state, there are projects for roof replacement that can't take place just because of the supply chain. product is not available, the material. So we're really happy with that. They ripped off the last section of the roof the other day, and so they're just doing the finishing touches. And our budget was 3 million. We should be below the 3 million mark. So we're very happy with that. Other projects such as the boiler replacements at Saks and at South are on target. And a real fun project that we are in the middle of is replacing our lighting fixtures at Saks in the high school with LED fixtures. And those fixtures generated over 300,000 in credits from Eversource. So they're supplementing the cost of that project for in excess of 300,000. On the operating side, we're operating based on a COVID environment as we did last year. We're more normalized in COVID, believe it or not, this year. Obviously, it's become more of a norm for us. We don't have as many expenditures because one-time expenditures were incurred last year, but we are moving forward with all the mitigation strategies that we had in place last year. Right now, we do not expect any issues with our budget. Usually during the summer when you're taking apart equipment and putting back your buildings back together for the start of the school year, you come up with things that are not working that need funding. And fortunately this year, we have not uncovered any of those big issues. So we are on track. The big issue that I mentioned earlier is the Internal Services Fund. And to that end, we are going to be updating our board on a monthly basis as to where we stand. And you'll see that in the statement of accounts that you receive from my department.
Thank you. Anything else? So the only other thing, just to touch base on the budget process, I assume that gets started before too long, right?
Yes, so in November, by mid to end of November, we'll start sending the targets out to the departments. Departments will start working on budgets typically through the month of December. And then, so the board of selectmen makes its way.
Similar. Great. Anything else for anybody? Committee? Haven't heard anything from Rob. Okay.
Yeah, no, I'm here. All good, Chuck. I mean, there was no questions.
Okay. As far as I know, we don't have anything else on the agenda.
I move that we adjourn.
So it's George.
I
Rob,
second it.
Okay.
Second it. Thank you.
adjourn. Thank you.